The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 26th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, really, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the law of attraction. Now, you're probably familiar with the phrase, success breeds success. I believe it to be true, and each of us can achieve this outcome. And it's a recipe that requires us to use two laws of the universe. Those laws being the law of inertia and the law of attraction. Now, the law of inertia states it's easier for something in motion to stay in motion. You know, a great example of the law of inertia is really for those who exercise. Question, is it easier to exercise once you've begun versus sitting around thinking about it? Of course it is. You absolutely know that it is. That's the law of inertia. The other law behind the formula is what I call the law of attraction. It states that like attracts like. You know, law of attraction deals with the attraction between ourselves and things like, you know, other individuals or places or conditions or basically everything that we want in our lives. Said another way, you and I, we manifest into our life that which represents our thoughts and our beliefs. The law of attraction functions like a boomerang, bringing back to us that which we project onto others. Think about that, folks. And the reason is because it's what we project onto others, either good or ill. So that means that we've got three options to attract the things that we want into our lives. Two of these options, they are easy, so easy. That which we like and that which is like us. Attracting these things in our life, all we have to do is become the person we admire, and our inner success will take care of our outer success. The difficult option becomes when we encounter things we don't like. Because if we focus on what we dislike, we will attract that into our life, and that, folks, never leads to a good outcome. In fact, my experience is we can attract that into our life much quicker. So you see, the universe, what the universe is doing on a consistent, ongoing basis is testing us. It's feminine and masculine energy. It has nothing to do with genders. It's just simply what the universe is doing. It's what's called the pitch and catch game. Quite frankly, it works like this in relationships. In that we have a relationship with the universe. Each day, the universe throws something at us. And then we catch it, and we throw something back, and this pattern goes on and on and on and on. However, it's at the moment when the universe throws us a pitch of negativity, that I'll call, that's when we must really be on our game. And we've got to be on our game to neutralize those experiences as quickly as we possibly can. So I found the easiest way to do this is, quite frankly, is to refrain from judgment, or better yet, find the good in every situation. And yes, I know better than most that this sometimes is one of the most difficult, and sometimes it almost seems downright impossible. But you and I know that the impossible is nothing more than the untried out there. That's all that it is. Maybe a difficult task, and when it seems like it's a difficult task to find the good, what you need to do, because questions control our focus, is you've got to ask the right question. And what's the right question? It's pretty simple. The question is this: if there was something good to come from this horrible situation, what could it be? You see, the cool thing about asking a question this way is it presupposes that you can find some good. You see, let me restate that question. If there was some good to come from this horrible situation, what could it be? Start learning to ask that question. Start teaching that to your children, to your friends, to your family members out there. Find the good, or find the lesson. And then guess what, folks? That's what it is you want to throw back to the universe. If you do that in a pitching game, the pitch and catch game of life out there, the universe has to respond back to you. And it's going to respond back to you by attracting that which you want in your life versus that which you don't want. And that is how you win the game of life, folks. Success breeds success. It is the law of attraction. 877-927-6648. If you give us a call, folks, be happy to take a look at your stock chart, answer whatever question I humanly possibly can. As we take a look at the futures markets here right now, you've got Dow futures up 4 points, trading out at 16,190. S&P futures up 75 cents, trading out at 1847 or so. NASDAQ futures up a couple points. It's trading out at $36.90. Gold back a bit this morning, down about $9 right now, trading at $13.33. Silver off 34 cents, down about 1.5%. It's trading out at $21.60. Light sweet crude up 40 cents, trading out at $102.20 and change. Natural gas back another 25 cents this morning, down at the 484 level. Quick peek around the globe. Let's see what we have going on out here. The FTSE over in Germany is or London. How about that? Let's get the markets right here. You got the FTSE over in the UK. It's down 0.5%. It's off 30 points. The DAX in Germany, it's down 0.5% as well. That's off 46 points. Asia, a little bit of a mixed bag. Last night evening, you had the Nikkei off 81 points, 0.5%. Hang Seng making up for it. It was up 0.5%, up 120 points, and the Shanghai up 7, about 0.3% out there. Now, speaking of the law of attraction. Speaking of law of attraction, this morning at 2:30 in the morning was a Jupiter-Uranus waxing square planetary aspect. That's when it came in. Why is that important? Well, Ray Merriman in his book, The Ultimate Success, let me think. His book is called The Ultimate Book on Stock Market Timing. His third volume, the third volume edition, Geocosmic Correlations to Trading Reversals. Inside that book, and it's a great book, folks. You might want to put that in your library. I think it's about $150 or so. But it is, in his work, he says that it's one of the strongest geocosmic signature planetary cycles that he's found historically correlating to the primary cycles in the U.S. stock market. And he gives it about a 12 trading day orb in the cycle in order to take impact. And his studies say that it correlates to the market 70% of the time. So, what do we think about that? Let's go check it out. Let's go see here what Stevie has done. Now, my journey throughout technical trading was, is always to consume. I love to consume. Unfortunately, I like to consume food too, but I like to consume new trading ideas and information out there. I mean, there's so many great things to be able to learn, whether it's from the contributors here at TFNN, other books out there. I know that each of you do that as well. And one of the things that I did as I took my game to the next level of wanting to understand, hey, what influences are there outside of just simply math or what have you? And quite frankly, it's all math related anyways when you take a look at the geometry of planetary cycles that are out there, but always looking for an edge. I know that most folks, you're looking for an edge, right? So in looking for an edge and taking advantage of today's tools, because let's see, Merriman's book was written in maybe, 2001, I believe, and that was, the third volume out there. So I don't even recall when the first volume was produced. But if we do take a look at this, what I was able to do is take all of the planetary cycles that are out there and digitize them so that I could overlay them on charts and basically, a couple of clicks. And so what I've got here as I've got some of the Jupiter-Uranus cycle. So we got one that came in today. Now, if you're watching us on TigerTV, I actually have the Dow up on my screen. We could apply this to any stock chart that we wanted to. S&P doesn't really matter. And if we take a look at it right now, so on my screen here, if you're listening on the radio, your mobile device at tfnn.mobi, thanks so much for doing that. So I've got the Dow on my screen here, and I've got each of the cycles. I don't recall how far back. We'll find out just how far back I actually took this. The last cycle that came in, the actual last cycle date. Remember, there's a 12-day orb, as Merriman refers to it as. That means it can go anywhere, before or after. And what I have on my screen here, this little blue smiley face, looks like a smiley face. That's our measurement for our 12-day orb out here as we take a look at the market. So the last one that came in was August 21st, 2013. Now, August 21st, 2013, if you're watching me, the Dow had actually closed out at 15,022. Well, with inside that cycle here, and you can see that my cursor, my crosshair, let me move this over just a tad once more. My crosshair is right about where where that cycle begins. So I've got this. Actually, I will just move it up here. Why don't I just do that? It'll be a lot easier for you to actually see it. So we're looking at August 21st out here, and you can see within that little cup, within that little smiley face, we did see, in fact, a fairly significant market low. You would have to say that we saw a significant market low the last Jupiter square Uranus out here, the waxing square out there. So if we take a look at that, we saw, now the market went ahead. What the market did was the market made 100% move of a move, because it actually made a little bit lower low within that 12-day orb. Made the low, it looks like, down here on August 28, 2013. What's the market do? Market makes a 100% move of move by getting back up to its last set of swing points from August the 2nd. And then it comes all the way back down and it tests that area. It tests that area that acted as pretty darn good support. Why? Because October 9, 2013, that basically was the low. Certainly you can see here during the low of that cycle out here. Now, should the cycle have changed to the other side? Let's just, so that's the previous one out here. So it says within a 12-day orb. Boy, time just flies, huh? Time flies, I guess, when I just speak the way that I do. We're going to go back. We're going to take a look at this out here to see if it's something that we should be focused on and paying attention to. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Kind of a flattish market out here. That means that it gives us the opportunity to take a look at, some fine work produced by Ray Merriman out here in his book, the ultimate book on stock market timing, geocosmic correlations to trading cycles. And what the real book is really focused on there is identifying critical reversal zones. And because when these planetary cycles occur, you can see these far in advance, or you can anticipate them far in advance. So we're going to go back and really take a look at the work. Now, one of the things on that August 21st, 2013 time frame, if you take a look at that 12-day cycle that is out there, 12-day orb, because it go on either side or in between or what have you, is you take a look at, or I'd like to take a look at, which way was the market moving, from a directional standpoint. Now, the question becomes, are you going to take a look at it on a daily, on a weekly chart out here? Right now, I've got the daily chart on my screen. What we know that we have inside the market right now is the market has been moving up. But, of course, if I take a look at that 12-day cycle, it would be impossible to rule out the bottom that actually came in, because almost really to the day, the actual low that was put in so far inside of the Dow out here is February 5th. And happens to fall within the 12 trading day cycle that is out there using that. So we'll focus. We won't focus on this so much. We will pay attention to this cycle. And I'm going to go back a little bit further out here. Let me try to carry over these cycles don't occur that often. Let me try to bring this tool along with me. The cycle before that occurred back in February 21st, 2013, so a year ago, right? Today is February 26th out here. And if we take a look at that February 21st time frame, the market was moving up. You'd have to say that, really was if this is supposed to be a significant market zone of reversal, critical reversal, pretty tough to say that that cycle even worked out there. And sometimes they do, I guess. Sometimes they don't. Let's go step this back a little bit further out here. See when the cycle that came in before that, February 19th, okay, 2012 out here. So if we take a look at that, that was occurring right about here. Let me see, where's February the 19th, just so I can go ahead and anchor this up properly, right about there. Now, if I pull this back, February 19th, the market was moving up. If we take a look at that 12-day orb on here, it didn't really work within that 12-day time frame, did it? Because we actually saw the market make a higher high back here in March of 2012, in April of 2012. But it was pretty close to a high inside the market before it moved down. Whether or not you really think you can use this or not, I don't know. I don't know that we're batting 70% here right now. Of course, we've only taken a look at 3 cycles. You want to go back and take a look at the full study. Let's pull this back further. Find the cycle just before that. Give me a moment here to pull this back. You've got February 17th, 2011. Now, February 2011. Did that make a 12? Did that make a 12 orbital cycle? Now, that really didn't work within the 12-day time frame as well. The market did make a fairly significant low back in March 15th of 2011 out here. So, you be the judge for yourself. If you go back one more cycle, that was February 17th, 2011. I won't even drag my thing back there. I don't have to at this stage. You've got February 14th, because I think of 2010 out here. And did that cycle work? Was it that worked out there? Was it the Uranus? Was it that's that Sun conjunct Neptune? I apologize. I've got a couple of other. I apologize. I've got a couple of other aspects that are inside here that we haven't even talked about here yet. In any event, let's go take a look at the futures markets out there. We'll continue to pay attention to this cycle out here over the course of the at least the next 12 trading days, because the question is, was there a significant low, quite frankly, that was put in here back on February 5th, and only time will tell. But let's go see what the futures market is doing out here right now. Let's start off by taking a look at the 120-minute futures contract. Let's look at the ES Mini. Let's go see what it is doing. Price here testing the rising price channel out here. You can see that price right now trading out at 1846.25. It's still above that 22 to 26 point consolidation break to the upside. Price is still inside that rising price channel. We have not seen, now this is a 120-minute chart out here, so this time frame is not going to complete until 10 o'clock, so we've got another 30 minutes before this cycle is over here. But at this stage, the bears have tried to push things lower, and basically they've failed. If this is their best run at it, they have at this stage completely failed. Maybe they were just simply waiting for this cycle to come in. Who knows? If we take a look at a 30-minute chart out here, trying to punch that up on my screen, looks like we'll have to do that when we get back from this first break out here. 877-927-6648. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're up to the races. We got the Dow up 30 points, trading out at 16,208. S&P up 3 at 1848. Composite up 13 points, trading out at 4,300. Russell 2,000 up 3.5 points, trading at 1177. Apple up $1.25. Google up $3. Leading the charge to the upside is Anika Therapeutics up 47%. Let me see, was that a buyout or anything? ANIK is the ticker symbol out here. Looks like... let me see here. Looks like they get a double blessing. So it looks like maybe they've got some kind of drug or something out there that was approved. Yeah, FDA approves Monovisc. So it is up a nice 47%. I assume with volume, we'll go take a look at it. Tesla up $11 this morning, trading out at $258. ExamWorks Group, EXAM, up 19%. You see, I don't know, I'm not familiar with that ticker symbol or that company, but looks like they produced revenues of $158 million versus $139, so they grew the top line nicely. On the bottom line, well, they grew that, but by growing it, instead of losing $2.68 million, they only lost $1.59 million. I would say they're flunking my exam of profitability out there. What do? They provide independent medical examinations, peer and bill reviews, and related services in the U.S., United Kingdom, and Australia out there. Boy, they are liking that stock here. I don't know. I'm not going to take a look at their balance sheet right now. LinkedIn is up $5.67. I think we looked at the LinkedIn chart yesterday. It's in a descending price channel out there. Maybe we'll get a chance to take a look at it this morning. Avago Technologies up 7%. That's up $4 and change. Baidu's up 2%. Chicago Bridge, CBI, up 2.5% here this morning. Let me see. Were they out with numbers? They were out with numbers. They generated revenues. Wow, how about this? In their fourth quarter, $3 billion versus $1.5 billion from the prior year. So not too bad there for Chicago Bridge. Net income looks like, man, how about this? A nice doubling there, $196 million versus $89.62. Now, lead the charge to the downside here, the jazzy one, unfortunately, JAZZ, Jazz Pharmaceuticals off $12, down 7%. We'll take a look at it. Questcor Pharmaceuticals down $6. That's off 8%. Sturm Ruger, the gun manufacturer out there, RGR, off 10% here this morning. They're trading out at $61 and change. They produce any kind of numbers out here. They declared, let's see, net sales $182 million versus $141. So gun sales are up. I don't see what I'm assuming that their profits were up as well, but maybe bad to assume that. Clean Harbor, CLH is a ticker symbol. They're down 13% out here this morning. They generated $26.8 million in profit, net income out there versus about $61 million from the prior quarter. Revenues $879 million versus $559. Questcor Pharmaceuticals, I didn't mention them. I know we have a few things jumping around here. That's down about 7.5% off $6. DreamWorks Animation, DWA, that's down 13% here, off $4 and change this morning. DreamWorks posted a profit. Let me see, where's their revenue number? $204 million versus $264, and net income $17 million versus $88. Not too bad. Income of $17 million versus a loss of $82 million from the prior quarter. During that second segment out there, our man Ken from Madison County, Iowa, was calling about the DGAZ, and my apologies, Ken, I didn't see you on the line out there, and know that he ended up dropping, so I don't know what the trade is. My guess is Not that I want to guess, but he was looking at the DGAZ. So let's not guess. Let's just go take a look at the trade potential behind this. Now, the DGAZ is the velocity shares 3 times inverse of the natural gas contract out here. Right now, the DGAZ trading at $3.51. Now, we have seen quite a reversal in the price here for natural gas. Whether you take a look at it, well, if you take a look at it on a daily and or a weekly chart out here, big key reversal session for the week. Now, obviously, it's only Wednesday, so we're halfway through it out here, and anything can happen, especially when it comes to natural gas. Now, it's so far this week, it's been a key reversal week, and that says that the resistance now really should be the top of this week. Should be the top of this week, which is $6.49. Now, that happens to be the March contract that's up on my screen, but no matter what you take a look at it, whether it's a continuous contract, you're going to see big old bearish engulfing so far, big key reversal session. And if we take a look at a monthly chart out here now, it's really come off of the highs. We'll take a look at an intraday chart as well. But if we take a look at the monthly chart, now the monthly chart here has not really given you a reversal signal. The weekly, it has. We've got a few trading sessions left in the month out here. Now, it's one heck of a doji candle. There's no question about that. So if we take a look at where things began at the beginning of the month in February, we had an open of $4.85. Now, this is the continuous contract that I'm looking at. So $4.85. And we're trading right now at 485, 484.5. So this is a big doji candle out here. Now, what the doji candle really means up at a resistance level, and they have a ton of meeting up at resistance. Number one, it tells you that you get strong resistance at the 1-to-1 A to B equals C. That's what was completed on a monthly chart. It also happened to be the 0.382 retracement from the time period here. Now, that's on a monthly chart. Now, there is a big reversal candle on a monthly chart, and that's looking at July of 2008, when it had made a high of $13.69. That was the high. The low during that same month of July was $8.81. Of course, we know that natural gas went ahead and made a low out here, pretty significant low, back in April of 2012 out at the $1.90 range out there. So what's the doji candle? Is a reversal candle? No, it just says that you've got some resistance at $6.34 out here. Let's take a look. So that's what the two longer-term charts look like. From a daily perspective, let's take a look at the daily perspective, see what we've got out here. Now, in this case, I've got up the April contract, so let's take a look and see what type of retracement we've done, see what kind of damage has been done on this current contract. We'll go from swing point, the most recent swing point low, which is January 10th, $3.85 up to that $5.20 area. And what we'll see is that price is trading below the 0.382 retracement. Says likely outcome. Now, that's a key reversal session as well that occurred out here 3 trading sessions ago on February 24th. Bearish engulfing candle. It does suggest a lower price. The way that it's come off here, with some pretty decent volume over the past couple of trading days. It says 437 is most likely the next target level. That's your 0.618 retracement. That would just simply be natural. That's where you've got your bullish engulfing candle. So you should see support at about $4.37 if that area, in fact, fails. So, Ken, if you're in the trade, you want to be watching what happens when price gets down to that level. If it gets below there, then $4.14 would be the number out there. Again, my apologies for not seeing one of our callers while I was babbling about celestial patterns in the marketplace. Let's go take a look, see what's going on inside of let's go see what's going on inside the currency markets out here. Let's go take a look at our best friend, the Euro-Japanese yen. We'll look at it on a couple of different time frames. First, let's begin by taking a look at the daily time frame out here. We're seeing a little bit of pressure inside of the Euro-Japanese yen. That's in the upper left-hand corner. Now it's the full screen out here until the Euro-Japanese yen breaks the February 12th, 2014 low, and that's at 138.66. Still nothing more than the sideways movement out here, something that we have seen inside this currency pair for a good half dozen trading sessions or so, and our market really doing something similar over certainly the last several trading sessions. So this still sets up at this stage here a move higher until we see a breakdown. The pattern we're looking at here at it potentially completing would be about a 0.618 to 0.786 Gartley sell pattern. That's what the daily chart shows. Let's look at let's step it down a few notches here. Let's go take a look at a 30-minute chart, see if we can see anything out here in the 30-minute chart. Come on, screen. I've got something slow. Something is my system shut down overnight, which was not a good thing. Was not a good morning when I woke up. That put me behind the 8 ball, and so I can see there. I don't know if there's something corrupt on this screen here. May just have to delete it. Now, what the Euro-Japanese yen is doing on a 30-minute chart here, it is now getting down to that area where I was showing yesterday. I believe I showed you this is a pattern that was shown yesterday, a 0.618 Gartley buy pattern. Now, it was coming into that with a wide-ranging bar. I'm trying to delete this right now so that we can redraw it. Come on, work with me here. Now, what we're going to do is we're going to first take a look at we're looking at the 30-minute chart here, Euro-Japanese yen. We're going from the low at 3:30 in the morning. That's on February 20th. That's out at the 139.18 level. So we're going to go from that low to the high that was put in at 10 o'clock in the morning, February 21st. We'll see out here, as soon as this behaves, come on, we'll see that at the, what a rotten shame. Got to like this. I'm going to have to put up with this for a couple hours. That means you're going to have to put up with it for a couple hours. My apologies. So the exact 0.618 level, 139.97. We can see that price is getting into the extreme over sold the level, but coming down there with a wide-ranging bar out here, and it says that really we ought to see, instead of the 0.618, that Gartley sell pattern, more likely we ought to see the 0.786 Gartley sell pattern. That should, if that's what comes to fruition, we should see some continued pressure, at least here in the early morning market hours, as price should move lower along with this currency pair. If we take a look at A to B equals CD down patterns out here, man, I don't think I've had anything. You know what I'm going to try to do here is I'm going to get off of this tab just in case this is where the system shut down. And let me see if I can pull it up a different way. Well, I know the answer is I can. Now we're going to see, because maybe that's where I've got something that is corrupt. UUR-JPY plus. There we go. Now let's go put this in the 30-minute chart and see what happens here. See if I can dance around a whole lot nicer. So far, so good. That would be nice if that's what fixes it. Yeah, look at that. So now we're going to go ahead. Let me just draw in those same patterns out here. Give me a moment to do that. Yeah, it's acting much better. Okay, so now we're seeing this move lower. We've seen our markets push lower. That way, live, you're able to see the correlation here between the two. And this is the currency. This is the carry trade inside of the market. We take a look at that 0.786 Gartley buy pattern that could be setting up here. That'll take us into right about this area right here, about 139.62 out there. If we're going to take a look at potential ranges to look at, here we're going to look at the 1.618 expansion of set of swing points. So it's about the 139.72, 139.62 should act as a support level, and we should see a bounce. Excuse me, we should see a bounce inside of at least this currency pair, which should then create a bit of a bounce inside of the market. Now, if this in fact holds or if this in fact fails, what we ought to then see is a move all the way down to that 139.18 level out here. It's that wide-ranging bar that says no matter what pattern is that you draw, because as this was coming into that 0.618 retracement level, that is one that says, okay, real pause button out there, because that is not how you want to complete a pattern. That's not the type of candle you're looking for at a completed pattern cycle out there, and that's at 139.97. We are now down below that. So that's what's going on the 30-minute chart. Let's switch over. Let me take a look at the 120-minute chart out here. Let me see how these screens here are acting. So right now, during this 120-minute time frame, we're into the 10 o'clock session, so another 13 minutes. We are seeing a bit of a break of that rising price channel out there. Price still, though, not to the top of that consolidation level. It's the top of the consolidation that ought to act as a support level for the ES Mini. The support level there right around the 1843 type range. You're at 1844.25 as we speak right now. Let's take a look here at the Euro-Japanese yen. So here's a 120-minute chart. Now this here is showing that wide-ranging bar also on that 120-minute level. That was the original targeted area. I hadn't touched this pattern out here because you had nice 1.618 expansion of a set of swing points as well as your 0.618 retracement. So that clearly is indicating to us, even on the 120-minute time frame here, it's getting down towards the bottom of that oversold level. But it does say to me that the 0.786 retracement is the more likely target, and that's on the 120-minute chart for the Euro-Japanese yen. But let's take a look at some of the other index futures. Let's take a look at the Dow out here. So the Dow, having been the weak link, and by weak link, we're really talking about its ability to get back to its highs out here. It's only been able to make the 0.618 retracement level, whereas the S&P near its highs, the New York Stock Exchange at its highs out here, the Qs above the highs, really just creating new ground out there. And so if we take a look at the weak link right here inside the Dow, it is breaking through its rising price channel. Again, this also will complete here at the 10 o'clock time frame. Is it a big break of this level? No. What did we see take place yesterday? We saw the break. We saw the Dow, which actually has been the weakest. The Dow was not able to get down. That was kind of interesting about yesterday's trading session was we saw a little breakout, and by breakout we're taking a look at this 10 o'clock session here from a couple of days ago, February 24th, and that low at 16,102. The Dow yesterday, as it was pushing down, was not able to get back there, whereas if we take a look at the S&P contract out here, it was able to get back there. The NASDAQ, really the same thing, got back. Where is it out here? Right here. It pulled up on my screen. Yesterday, as price was coming right back to that breakout area with lighter volume. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 18 points right now. S&P down a couple. Russell 2000 is flat. NASDAQ composite up a point. Let's go take a look at some of these stocks here that are moving and grooving to the upside here. Anika Therapeutics, ANIK is the ticker symbol, up a nice 46%. Boy, oh boy, with some big volume out here. So this is a big day for them, way at all-time highs, I would believe. Let me pull this thing back to a monthly chart and take a look at it. Yeah, big time out here. And on a weekly, let's put this on the weekly chart here, trying to get a price target for where this is likely headed to. You'd have to say price-wise out here, you're looking at the A to B equals CD pattern on inside this equity has got much further to run to the upside here. So looks like $59 is the one-to-one, but the way it's past the B point, 67 to $77 would not be out of the question, and that is on ANIK as the ticker symbol. In this little tab here, I did mention earlier LinkedIn was higher. It was up about 2.5%, up $5. What LinkedIn has done, second day in a row here where we've seen a gap up inside of LinkedIn. I believe that was off of an earnings report from a couple of nights ago. What LinkedIn is going to do here, if LinkedIn's going to break out, so you've had two gaps, which is strong stuff. Yesterday, you had some nice volume behind the gap as well, about 5.8 million shares. Now, the top of yesterday was 211.55. The low thus far is 213.11. So another gap out here. And the real test for LinkedIn is going to be when it gets to the top of this descending price channel. I can't tell you the exact level where that's going to complete at. Looks like maybe right around the 220-ish mark, so maybe about another $5 to $6 higher than where it's trading at right now. We'll pay attention to LinkedIn out here because this has acted as some good resistance here. I look at break of this level, come back and test it, and then stay outside of the descending price channel, and the trend will have changed inside of LinkedIn out there. LNKD. If we take a look at leaders to the downside here, well, you've got a couple of them this morning. The one we're going to take a look at, the one that's leading is DGI, is a ticker symbol, DGI, which is Digital Globe. Digital Globe is, let's see what they do out here. Digital Globe, I'm assuming they do something with the globe that's digital, right? They provide commercial Earth imagery products and services in the Americas. Operate two segments, defense and intelligence, as well as commercial out here. They generated revenues of $630 million for the fiscal 2014. Their fourth quarter revenue, they did $169 million. That was a 35% increase over the prior year. DGI, though, they are getting just absolutely hammered this morning with volume. So I don't know what they were guiding. Maybe they were guiding, the end of the earth or something. But it's the end of it's there for them. It's scorched earth out here. I'm sure they're not taking a digital picture of this, although we got the digital footprint right here. You've got volume off of the highs. Not a good scene at all This has already had 3.1 million shares to the downside, gapping down, taking out a swing point, coming into the last breakout area with volume. Boy, it's doing everything that you don't want to see it doing on a technical basis. This had a little, was this a breakout or was this a high volume? Well, let me pull this back here. Yeah, a little bit of a breakout. On October 31st, 2013, 4.2 million shares. You're coming down to that area. We'll see if those funds are going to go ahead and support the equity. That's at a price level of $30.56. If they are not supporting it and they are out of Dodge out here, then a huge markdown has begun inside of DGI, Digital Globe Inc. out here. Folks, man, our Wednesday is over. Sorry the time flies so much. Stick around. I'll be up next during the Money Masters show. If you're off to start your Wednesday, have a terrific day. Look forward to seeing you tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.